All right, everybody. Thanks for joining. This is it's June 3rd. Can't believe it's already June, but yeah, we're gonna get just to start rolling here with the market analysis. So what I was going to start out with is DXY, or the US dollar. Not only did Don have a question for it, but I think it's good to set context. We haven't looked at it in a while, so let me go ahead and do that, and then I'll just do a quick view of the. Sorry, make sure I share the right screen. All right, Don, you were in charge of letting me know if this doesn't work while I'm talking through it. Okay.
I see a chart.
Yeah, there you go. I was so mad last week. I'm like, you gotta be kidding me. Did the whole recording of the whole thing and then realized that there's a setting on here that says share your screen, and then it's share the monitor. You're like, okay, well. Anyways, so I drew this line a long time ago. For the dollar itself, it has many different implications, as you guys all know here. And what I was thinking here is that this is kind of a good place to start here before we talk about metals. It's been going sideways for a while. It's been kind of tracking here, but with the U.S. debt kind of spiraling, it's becoming a little bit more of a conversation topic. So I guess just to kind of touch on it briefly, this consolidation zone here, I think it's got a little bit, or it does have a bullish chance here to take a jump and kind of like retest this trend line here, and then that could also impact this. But I kind of feel like that's not going to be, or we're not going to really see something like that right now. We might just see. Here we might see something like this. This is kind of the same situation where it might bounce on 100, or bounce off of the 100 level, and then head down to maybe like 95 or something, and that kind of makes a bigger pattern. As you can see here, like just like a ending sort of pattern. It has been kind of expanding here, which is not necessarily like super bearish, but again, with all the debt and stuff that's being with all the debt that's being issued, and no solution in sight here, the increasing value of the dollar, in my opinion, would be more due to like a flight to safety sort of thing. So it's actually kind of why I think yields have been depressed a little bit lately, is that people are picking up bonds. There's a lot of rebalancing going on with pension plans and things, from May into June. So maybe we're switching a little bit more defensive since we've had such a monster run. But yeah, I guess the long story short here for the dollar is that it does drive a lot of different things. So the dollar and the yield, I think, are one of the more legendary inverse pairs. So I guess just keeping it at that. There is a potential here for a slide, but I do think that we might get a little bit more of a run up here, maybe closer to the 100, and then that might have like negative impacts for metals. So we can talk about that here in a second. But all right, Don, any questions about the dollar here, or else I can switch to indexes?
Well, I don't. It's like I don't have any question other than trying to figure out, which influence is going to move it. Is it going to be higher crude oil, which is priced in dollars, which is going to be positive for the dollar? Is it, people moving out of the U.S. debt, which is negative,
right?
And where interest rates are going to be.
Yeah, so it's kind of a soup of uncertainty right now.
Yeah, that's why it's kind of like treading water, I think.
Yeah, well, unfortunately, I don't know if we're going to have an answer anytime soon, but I think it'll probably be like a slow moving sort of disaster, like a plane crash, but in slow motion. We'll see. Try not to have bias. Okay. All right. So let me switch here quick to the S&P. So I'm kind of thinking that Wednesdays are ending up being the pivot days of the week. Like at the end of the day on a Wednesday, there's been several different webinars now that I've done where we've had some pretty nice moves where that wasn't true like on Tuesday, right? Like Tuesday, we pretty much ended like right at the top, but it was still kind of weird price action. Trying to call it out that way, but I guess when we're looking at stuff here like the S&P and Nasdaq, they've just been unstoppable. I blow off top. It's just what happens. You do get these little pullbacks here. Like we saw kind of in the middle here, kind of thinking that might be some higher volume. Where we might have some sort of pullback, but it didn't really materialize. The volume's a little bit weird on this ticker, so this is not really representative. We actually should probably look at ES for that. So the ES volume, if you look at it from like a daily standpoint here, and just look at the volume down below here. Try not to look at this. So like you still have these higher volume sell days, but then after you have a couple like profit taking sessions, then the bears just back off. They spike it again, and there's all sorts of just running up from the bulls. So I mean, I said it before. I think it's not just the bulls that are greedy. It's the bears also. Like they want higher prices to sell at. But as we've said before, talking about like volume and inventory, the air is very, very thin up here. So, and also we'll just do a quick little check here of the volume here for Nasdaq. So you can see before, when we had that Monday, May 18th, we had a huge volume day, and then we had another one the day before that. So this is, in my opinion, this is sort of like more profit taking, and then you just had another lower volume type of run. But the one thing to flag with this is the secret sauce chart. So this is the market breadth chart, and you can kind of see here that all these different sectors. This is all the different sectors of the S&P that are trading above their 20-day moving average. So you get these. So you get the price here in red in the back, and then you can kind of see the divergence here between the different sectors. So you can kind of see, like your utilities are kind of picking up here, where we didn't really have much before. So there, I just feel like there isn't any fear right now. And if you get a couple percent pullback, you could definitely see like a spike in the VIX. But with the VIX at 16, in my opinion, I think this is very good, like a very good time to start looking at some options and things for longer term time frames. I mean, of course, you do you with risk management and everything. I can't tell you what to do, but I kind of feel like you get a bit of a shot across the bow here when it comes to looking at charts like this, where yes, it's been diverging for a while, and you can kind of see the writing on the wall here. We're like, last time we got this kind of, the last that little wave 4 that we had back in March. That's kind of the news headline driven, Iran peace deal stuff that we've been going through. That's been beat to death since then. But we still had declining breadth ever since then. So I kind of think that there's some people in the know that have been, dropping shares here and trying to readjust portfolios to be a little bit more defensive, or just going to cash. So that's kind of what this chart is telling me here. All right, we're gonna just kind of focus on the S&P here because the Nasdaq is still a little crazy. But just looking at the daily level, let's actually switch to the 2 hour. So the 2 hour here, I'm not quite sure if we're done with this little like, wave 5 kind of thing. The wave counts don't really quite align here, but sometimes that can be the case when you look at these these like big tops. And also, again, we're doing a blow off top here, so I wouldn't be surprised if it just runs and goes to space tomorrow. But you are starting to kind of run out of room here when it comes to extension levels and things like that. I can already see we've got 5 waves in the middle here, so I mean this is a very clear kind of wave 3, and this to me is a very clear wave 4. So I do think that we're getting very close to some sort of top, or we're starting to see some of the volume pick up. So especially when you kind of we see this first kind of stab down. The first clue was last night, really, when when we saw like with just futures, we saw a very quick stab down, very high volume test of support. I showed that channel earlier this morning, but when you get that very high volume test of support, that's when you get these. Usually like the follow through the next day. But sometimes if it's not strong enough, like it's not really that motivated of a seller. It might just be profit taking or testing the waters. Okay, so let's kind of zoom in here. Let's kind of see what happened today. Let's see if I got it on the other chart, so I don't have to redraw it. Be nice. Nope, definitely not that one. Okay, yeah, let's go back to this one. All right, I'll just draw it. So typically, when you're looking at these waves, I'll do the I guess the wave one kind of bullish setup here. Sorry, not I'll do the bullish scenario first. That's probably the easiest, just because things have been going up here. I'll spend probably a little more time on the bear scenario, just because I feel like I get a lot of feedback on people that like to understand the levels and kind of prepare for what might come. So I always like to try to mark the different potential like shoulders or pivot points. We also have this important level as well, and I'll talk through that. So typically, when you're looking at these days here that have some decent follow through, it wasn't like a scary kind of sell day, but it still kind of feels like again, a shot across the bow, where we've got now that sorry, just kind of looking at this while I was talking, this actually does kind of look like a pretty clear 5-wave, kind of a weird looking wave 4. Yeah. Okay. Anyways, so okay, so that it's kind of what I was looking at last night, but now it kind of looks like we could start to see a series of ABC like corrective patterns. So kind of like what I was talking about before here. Typically, when you see like the first day of like a pullback here, start to test these major levels, you can also start to see where you get the volume that picks up with the bulls. So let me go on the 15-minute chart. It's probably better. So this level here, this 75.50, that's been a pretty important level here. Ever since the bulls kind of went above it, you still got some selling into it, but it just kind of grinded up after that. And you can kind of see that the volume profile here is kind of shifted towards more selling up at the top versus reaccumulation. So I kind of think that there's a pretty good possibility that we might actually continue to roll over here, but I do think we'll have some sort of bounce. So with that being said, let me get rid of some of this stuff. So let's assume that we had some sort of, I wouldn't say top, but let's just assume we've got something going on here. One pattern that emerges here pretty quickly is like the megaphone. Now the megaphone isn't exactly like a it's not exactly like the most reliable pattern, but it does show weakness. Excuse me. However, we did see the same kind of thing back before we had this turbo rip up. Sorry, I actually won't go into that. I don't want to deviate too much from the plan here. But we did see something like this before, and then it kind of broke up and above. I do have the Nasdaq chart, which shows that in greater detail. Let me see if I can get rid of some of this crap. And the problem is I have all these drawings, so I don't want to just delete them all. And that's not the world's best. Okay, sorry. Get it together, Gaines. Anyways, like we're testing these levels. It's probably a better version. Yeah, let's do this instead. So you can kind of see here that this is like a long-term sort of trend line that that the S&P has been riding here. Sure, there's a little bit of variance here. Like if I switch to logarithmic, sorry. Yeah, so like just regular price weighted here, you can start to see that it is a pretty decent wedge. So we've got these different counts, and this really does kind of look like an ending. Oh, sorry, what's going on here? Like an ending diagonal, but really like a really long one. Started like way back last April, like 2025. So since we've kind of like shot above it, and kind of switch back to this other pattern, like you can kind of see that we're starting to bounce off it a little bit. I guess that would qualify as like a false breakout. So from a bullish perspective, like there's always going to be some sort of retrace. So what I was thinking here is maybe if the bulls really do stop it here, then you might be able to see some sort of a retrace higher to make some sort of like a head and shoulders kind of pattern. where, you know, you could see like, yeah, okay, it looks like we got a double top. It probably wouldn't be this soon. It might be a little bit more symmetrical, just with some reaccumulation. But this is still a bullish scenario. You know, it's still a recovery of a couple points. Okay, so like 1%. You know, I mean, that's still a really good day if you have you know, options and stuff. So I'm not quite sure what's going to happen here. It does look a little selly after hours, but you know, anytime that, you know, kind of started with that, usually when you get to like the, you know, the Asian session or something, they can take the ball and run with it. So this might just be more like target hitting and, you know, taking profits and, you know, stuff like that with futures. So we're just not sure yet. So I guess anyways, this is still a bullish scenario, even though it's turns out to be a little bit lower. You can still, you know, still means you can get out of like positions and stuff like that. There's another bullish scenario. Go ahead, Don.
I think Broadcom and CrowdStrike both reported, and they sold off on the news, so that's why it extended down.
Okay. Yeah. Yeah. You know, when you have, you know, a monster run like that, that can happen. So here, or at least like, you know, some profit taking and a little bit of bloodletting, you know. So here is I would say like probably the most bullish scenario. You know, again, with all this selling here, I mean, the bears could easily turn it off. You know, by tomorrow morning, we could be back to business as usual, where we just keep running up, and then we have a quick sort of retrace, like we have, you know, in these different ways before, and then you see, you know, another charge up here. So, I don't want to discount this because it actually looks like a pretty easy sort of bullish pattern, and that's actually what you can kind of see here, where that would give us those 5 waves up here to kind of complete the pattern. You know, the extension up here to like 770, something like that. But you know, there's only so long, you know, these guys can ignore, you know, high oil prices and geopolitical tension and spending and yields and stuff like that. So with that being, I guess equities have just been ignoring it. So, but yeah, eventually it'll stop. So I think really what I'm doing is I'm keeping an eye on the Dow, because the Dow, I think the chart for the Dow is a little bit easier. Yeah, here we go. So the Dow made another high here, but this still looks like a pretty clear sort of ending pattern. And you know, there's a certain, you know, certainly a possibility that you could reach up if to like 52,000, something like that. But if the Dow starts, let's say the Dow starts really dropping and blasting through these moving averages, then it's definitely time to you know, consider that you know, this bull run might be over for now. But you know, kind of moving back to the S&P here, you know, the Nasdaq isn't really, it's kind of keeping everything up still. You know, it really just looks like a small dip that will probably get bought. You know, right off the bat here with futures open, we definitely saw, you know, a big spike. But that could just be, you know, a, you know, speed bump. So, anyways, that's the bullish scenario, I guess, longer term. Probably, you know, the next couple days, maybe next week or something like that. You know, we do have non-farm payrolls on Friday. So what we could see here from a strategy perspective is you could see potentially like a lower low. Maybe let's say we get another little corrective move. So something like this. Let's say we get an extension here, and this is, let me draw this. So this is probably be the, I guess, bearish scenario light. I don't know what else to call it, but here we go. Like, I mean, I don't really know if it's quite done yet. So, but we could still have some sort of revisit of this low, but not quite low enough to make a new low versus like May 27th, 28th. Is we still got a lot of buy delta here, so you know, you're going to get some more accumulation, I think. So it'll be a little bit more difficult for the bears to push it down, but that 7,500 level is going to be pretty important as far as, you know, as far as I'm concerned. It's also a pretty good level of support. So with that setup here, you can still see like in continuation. I actually think probably what we'll see overnight here is a knife catch where, you know, let's say you get a little bit lower, then the Asian session starts here, and then you can get a push back up to something like this. You know, right back up to that 75.50. And that's my, you know, if you don't see that tonight, maybe what you see is accumulation right down here, and not much action with futures, and then maybe you get that push up in the morning with the morning drive. But it becomes a key test here to see if we get above the 75.50 level, because if we do, I think that it's more of a bullish bet then. So it's sort of like that's your bifurcation level where you could see bullish above and bearish below. But anyways, this is more of the short-term sort of bearish scenario play out here, where you can get a little bit lower below, and you still get this sort of same like megaphone type of pattern. It still doesn't invalidate anything, but then it sets up the next sort of bull run here. So that's, you can see how it gets a little bit complicated, where the first wave down is always the most difficult to forecast. But whenever you're sitting in this sort of quagmire of never-ending rally days with with the S&P, or just Nasdaq in general, like you have to kind of look at both sides and kind of prepare yourself for what might happen. So that's why I try to go through the different bull and bear scenarios here, just to try to prepare you for, like, don't panic if you have a bunch of open longs and then you see it drop a little bit more. Odds are you'll get a retrace. So even if you see, even if we do get a semi-scary sort of drop here, you're still going to get some sort of day or two where you get some sort of retrace higher where you can exit. And that's typical give and take here with the with the market, especially like at these tops. Like sellers are selling at a strength, of course, so they don't want to just step on the gas and sell it and make everybody freak out and run to the door, because there's always vested parties that want to keep markets elevated, like especially market makers, because if everybody's buying puts and everybody's one-sided, especially like 0 DTE, that's going to mess up their their hedging flows. So it actually does, I think it does more good than harm to when everybody's buying 0 DTE puts, because it forces market makers to buy, and that usually means they're catching the knife for you. So that's why you always want to look for volume and stuff like that. But I think it's a pretty important point. So hey, Jake. Yeah, so that's I guess that's probably the I was just wrapping up the S&P view here. But just to kind of recap here for the folks at home, especially since Jake just joined here. So this is still a bullish scenario. If we have this sort of megaphone pattern that develops, let's say it stops here, and then I'd say longer term, you still have this sort of possibility where you get this this completion of this longer term pattern, and that would end right around this like 60 or 76,500, or maybe even a little higher. But still, it's it's something to consider here. So those are the two bull scenarios. The bear scenario is you have a little bit more of an extension lower. Like I said, that's 70, or the 7,500. So that's, I'd say, like short term, but overnight here you might see this little pop up and continuation tomorrow, but like a knife catch kind of thing. So I would say if you got short profits, take them early. I can't tell you what to do, but this does look like a pretty nice round of selling here, where it's starting to look like you're going to get like a crack in the narrative here for equities. I mean, it's about time to be honest here. But if you do wind up seeing this continuation here, then I would say wait for a bounce, and then go short. So right now, if you are short, you got in, and you got some shorts in the green. If we do get a little bit lower, watch your measurements, watch your levels, and then take profit. Well, the profit's good, and then wait for a retrace. If you don't want to go long, you just wait for a retrace and then reshort if it looks like it's about time to do so. So that's the indexes. Any questions before I move on to the different views? All right. Of course, I'm assuming I explained it better than anybody else. No questions. All right. I think this is a pretty cool view here.
I have a question actually. Like, yeah. What is the relative? I've been using relative volume a lot, and what is it telling us about the selling that's happening right now, is volume picking up significantly relative to where we've been, or is this like a low volume sell-off?
That's a good question. Let me grab the chart again.
Because that'll help me understand whether this is a buy the dip tomorrow or
or everybody out. Yeah, so before you joined here, we talked a little bit about like it's a little bit of a breach here of the prior high. So this is, technically this is not really like a 5-wave setup. I mean, you could do like an ending diagonal here, but from a volume perspective, you still get that decline. But this is just with futures. What I think is important is you got the market breadth view here, where you've got this divergence of price and volume. Sorry, not volume, but like you get this selling off with all the different sectors. But from a sheer volume view, this I think was sort of the trial balloon, where the volume is a little bit low with futures, but if you go to SPX, like try not to look at these big spikes. These are sort of like rebalancing, rebalancing moves. These look a little bit weird, but I'd say it's slightly above average. I don't think we've had anything that would confirm it yet. If you look at something like Nasdaq gave us a little bit more sell volume today, but you still had a lot of buyers trying to prop up other tickers and stuff. I mean, hopefully that answers your question. It's like we've seen over this last run up, we had some really high volume, like back in Monday, May 18th here, but then it just kind of kept creeping up until now we get the now we get the next stop sign. So I would say it's not quite time yet to go whole hog and short the crap out of this thing, even though it's very tempting to do so. I think it's you still need to have caution. Especially if thinking like short-term trades. I think this is probably more of a setup for like longer term swing trades, where you could feather in some inverse ETFs. Like I mean SOX, like SOSX is probably, or the inverse for SOX, not SOXL. It's probably not the one to pick up yet. Since that is the most bullish part of the market here. But I would say like S&P was down a lot more than the Nasdaq was today, which is surprising. And then also with the Dow, I think the Dow is probably going to be a better short. The Dow has a lot more volume when it comes to that. So hopefully that answers your question.
Yeah, that's really good to see the Dow. I don't want to be a hero and try to short the leading index or leading stocks. I don't care about shorting semis, even though we could say they're overextended. They got the relative strength.
Yes.
And so does tech. So Dow makes sense to me if we
so
want to get
it's
a
almost
short.
like exactly like it's almost like the basement's kind of crumbling around. Like the Dow is a good indicator of that. I know Alex makes comments about the Dow as well. Being kind of like the leading piece, but I think actually the biggest thing that I think is really the canary in the coal mine here of what's to come is the Bitcoin chart. I think Bitcoin's kind of due for a bounce. It is oversold, which kind of gives me a little bit of concern for something like saying, oh, short equities. Like no, I don't think it's the time for that. I think if you have small little swing trades, like I said, profit taking is nobody ever went broke taking profits. You can always reset. But I think it's like this is just the first kind of wave, and I think you'll probably see something like this where whether it ends up being a 5-wave or a ABC, it doesn't really matter. It's a concept here. So this is still a bearish sort of ascending pattern, and I think since Bitcoin really is kind of like leading the charge here, you still got a ton of sell delta up here, and not a lot of buy. So it's already gone below that, and I think that a lot of retail traders are trying to buy the dip here, and if the sellers step on the gas here, you could get a lot of wipeouts, and a lot of wipeouts and capitulation here with Bitcoin. But yeah, to kind of to comment what you're saying, Jake, like there's a lot of people out there that like look at something like this and say, oh yeah, like that's going to be an awesome short. Yes, it will be an awesome short, but not today. It might be. Like I did add some recently up here, but I'm just kind of feathering in because I know that if this bubble does pop sometime in the near future, SOX is going to be a very large return if you do have an inverse ETF. I just think like you gotta, like if you're gonna play the short game, you gotta be willing to be wrong. I mean, it's better late than wrong as far as I'm concerned. So anyways, to kind of round that off here, it's like you're starting to see some cracks. Bitcoin, I think, is the driver here, but the Dow is the one that's been showing a little bit higher volume here, and I think that's a kind of a signal here. I do think that if we zoom in a bit more, you'll probably see some sort of version of a head and shoulders, maybe. Where you get a bit of a retrace, and you could see maybe something like that. And then if that translates to something like the S&P, then that could definitely give us that last that last bullish kind of run up here to kind of complete this pattern. Now this is just one part of a smaller part of a larger pattern. Get some of these trend lines out of here. But yeah, I think it's important to at least be aware that like this is still we had it was high and tight, and high and tight typically means we're due for something, or for some sort of some sort of bloodletting. That was probably the second time I've used that word. I've never used that word. I don't know why, but this is still a very viable scenario here. So if you do get a bounce in the Dow, the whole thing that's going to carry the market is going to be semiconductors again. And if you flip back to that chart, you can still see that it's got some more room to run here, especially if it's forming the same sort of pattern. So, I mean, high and tight doesn't necessarily mean it's over. We learned that lesson a lot. And the more and more you're willing to at least accept, poor entries and stuff like that, I think it makes you like a better trader. In my opinion, I think you can still see that, you could have a wave 4, and then you can still have like a, continuation here with with like an extended wave 5. I mean, it still qualifies as a blow off top. So I don't want to be dismissive of it. But yeah, shorting stocks is not the right move. I'd rather short, stuff around it. Nothing really semiconductor, but if all ships kind of rise and fall with the tide. So let's be wary of that. Okay, so
is IWM also showing weakness?
Oh God, who knows what short small caps do? Hold on, it's a joke. So yeah, small caps.
So relative weakness on high volume. Or is
it
the Dow?
Not really.
Not really. Okay.
Not really. Yeah, it's not really showing up. I mean, today's really been the first day where you've had any sort of material pullback. So I'd say if we get a continuation tomorrow, and then maybe let's say we get non-farm payrolls that are positive, you'll get a bounce on Friday, like a big bounce. So I would say, if we open up low tomorrow, still consider taking profits before the end of the day, that kind of thing, because you'll probably get some sort of bounce. No matter what, there'll always be some sort of catalyst for a bounce. All right, so the last thing I wanted to show here quick, and then I'll move on from these indexes, is right when we first started, I was looking for this sort of view here, where it was showing this tiny little overthrow of this longer term sort of trend line, and this is where we started back in like December of 24. So this isn't anything to be yes, and this is also the logarithmic chart. So this is the one that I think is more accurate longer term. So you can sort of see, relative to like the volume that we had today, you can kind of see this at the daily level. Like, yeah, we did have a decent amount of volume. I'll take that. But to be fair, there was some volume issues here with this ticker a while back, and it seems like it just got kind of fixed towards the end of May here. So I don't want to put too much stock into that right now. I'm gonna do a little bit more research on it and see if I can get a good parallel. But look at something like the SPX. Yeah, it shows volume, but it's not exactly a good parallel, I don't think. So anyways, yeah, all I wanted to say with this is like, so if we do break this level, that's a signal of weakness for sure. And then you kind of know it's a false breakout. You could still get people buying the dip, but I would still look at this, 75-50 level as being like your next sort of, limit to breakthrough. Because if it goes past that, then it's bullish. If it goes below, then it's bearish. I try to keep it simple with that. Okay, so let's move on. I wanted to show the yields. So the yields here, this I think is, I think you might see potentially another little pullback. I mean, I could still see like 5 waves here if you kind of squint, but it's possible you could see another rip down here. So the only way I think you'll see that is if we have more, like a positive non-farm payroll sort of report, and let's say unemployment ticks down 0.1, the bulls are going to go nuts. So just be careful if you're in some of those trades, like maybe take just, it's kind of hard to say, because it's like if you're playing the entire market, like yields and bonds and metals, they can kind of run away from you while you're looking at something else. So just be careful with that. I think position sizing is very appropriate for this sort of conversation here. But I would say if you get a good non-farm payrolls, you could see a jet down, and then you could also see like support here at the 50 DMA. But I do think that once we start to get more, I guess higher for longer for oil, you're going to start to see these yields increase. And like I said before, Jake, before you joined, I think it's a lot of people that are, a lot of people may have bought some bonds and pushed yields down just as a matter of rebalancing coming out of May. But I don't know, it's kind of hard to put your finger on it. But anyways, yeah, yields, I think longer term they're going to go up, but they could have another little stab down yet. And I think that will definitely be a catalyst or a tailwind for equities, and maybe even tailwind for the dollar down, which would be negative for gold. So this chart here, I think it's definitely possible you could see like a continuation lower. Sorry, without drawing too many lines and making everybody nauseous here, let me just take a look. One quick look.
Did you say negative for gold?
Yeah, rates higher rates could be, yes, negative for gold. Or sorry, the dollar. It's kind of a weird soup. Like that
we would see gold go up.
Well, so that's typically the case. Like if people are looking for an inflation hedge, but they don't really pay returns like bonds do, or sorry, pay dividends like bonds do. So sometimes you can see some like breaking of those correlations. So it's kind of a weird thing right now where people aren't scared enough to buy protection, or people aren't scared enough to like either buy a whole boatload of bonds that are going to devalue, or flee to metals, that kind of thing. You did get an extension. A equals C kind of level down here where this 43.67, but there's definitely a possibility that you could see this extend down here to like this 42.70 level. But I'm definitely a buyer at the 42.70 level. I've already been a buyer at the 44 level. But the more and more I see this or pattern kind of taking shape here, the more it looks like a pretty gnarly bull flag here. I'm not necessarily saying it could be a like a wave 2. I mean, it could just as easily be a B wave kind of thing, but it doesn't really matter. It's more about the concept. So we could putter around here for a while, but this sort of zone here, this extension zone I've marked, this is it could also double as like your buy box. So that's sort of my take on it. Silver is not exactly the easiest chart to look at right now. I think it kind of looks like we're going to have another low, and if that's true, then gold might do the same. But I don't know how long it's going to be that way, especially if you get because I mean this is still sort of like a bullish sort of ending pattern. Maybe, sorry, I'm a little small. It's kind of like a scoop, like a, I don't know, like a ladle. I don't know. picking up liquidity. But yeah, if you get a little bit lower here, like 70, that kind of thing, or even 67, you still have big support down here at the 200 daily moving average. And don't forget what had driven gold and silver to crazy heights before. Those concerns aren't gone; they're still there. It's just now that there's accumulation here. Commodities typically tend to extend their their 5 waves. So even if you do see lower levels of metals here, you should definitely see some sort of run up after that, because there's still a decent amount of buying. Oops. Yeah. So here you go. So you're kind of seeing. Let me zoom in. You still kind of see we've got some buy delta here. Whoops. You still got some buy delta here right around the level from before. It makes sense here. You got this pretty strong buy up, but it doesn't look like there's a lot of volume here on the sell side. So you still got this 200 daily moving average that it bounced off of before, and I have no, I guess I don't have any worries that it's going to continue to sink down below it. Anytime it's been above here, it's always bounced. So I just think it's consolidating. That's all. Everybody's focus is on equities right now, going nuts. They're just slowly accumulating. All right. Any other questions about metals, or I'll move to oil? All right, oil, I think is just pretty easy here. As soon as I say easy, it's going to turn on me. I would say there's a possibility here for here, let me get this out of here. So this sort of pattern here, it's definitely a flag. You can kind of pull it out here. If you're not a real big like chart kind of person here, you can still kind of pull out that this is a flag. And we are technically on the fifth wave of this flag, which would mean the breakout leg. So I'm not saying that this is a wave 2 or anything crazy like that. I still think that it's gonna it's just kind of waiting to break out as these guys accumulate more. And you can definitely see here how anytime it gets a little bit low, closer to this bear target 1 level, you always get some sort of buying. Let's say there's a possibility here you could get one more tweet storm or something where it pulls back a little bit, gets more accumulation. You could also see something like this where it hits the 50 and then reverses down, and you get another little leg down here, just like 85 or like 85, 86, that kind of thing. But I don't know how likely that is, considering we've got about a week and a half or 2 weeks worth of supply left, with the strategic reserves here with oil. And I mean, we already bombed Iran once this week, like, oh, but there's a ceasefire still. Oh, God, so tired of those headlines. Anyways, that's kind of my take here on oil, is that it's just kind of coiling here for another move. And I don't think that there's any resolution in sight. I really do like the Nacho acronym here being pushed around Wall Street. It's kind of funny for me. Not a chance to, or Hormuz opens. So one thing that's been weird here has been natural gas. Natural gas hasn't really followed the script so far, but I think if you're still going to have closures of those waterways and blockades and all sorts of stuff like that, it's just going to continue to drive up the price. I think that the states definitely have a lot more liquid natural gas, so it's not as sensitive of an issue. But if this drags on to winter, or fall and winter, you can definitely bet that I bet you'll have a pretty bullish September for gas, considering how last September was the weakest September on record for gas, which is their big month seasonally. I covered Bitcoin before. It's just not looking good. It's getting beat up. But yeah, I mean, it's you're just buying ones and zeros. Yeah, we covered that before. I don't want to beat it to death. Stock, I covered this one before. This one, I think you might just have another low continuation and another run here. I don't want to discount that. Nvidia, I think you are going to see probably a little bit more. Now that they've had the ex-dividend date here, or sorry, ex-dividend dates tomorrow. So, if you got a lot of people that are in this trade, you probably get some selling after, just for the dividends and stuff. So you could see that, excuse me, you could see that continue. I don't know if it's going to really go down this far, like, 191, but I still think that, something like 200 is reasonable, 202. But I don't think that's going to happen all in one day. You'll probably see some sort of like, bounce and, B wave kind of thing. Tesla.
Yes. B wave. Let's get that B wave.
B wave, B waves. Yeah. I agree, Jake. All right, so here you go. So so Tesla, I think, is right in the middle of trying to figure out what it wants to be when it grows up here with the chart. So it's got this really tight sort of triangle here, and that doesn't really work longer term. You always get some sort of like continuation. So you might see something here. Let me just get this crap out of the way. You might see something like this, where typically, let me draw this out. So if we're going to consolidate some more here with Tesla, I still like the stock. I still like, I still like how Elon, anything the guy touches turns to riches. But people are still, anticipating like the SpaceX IPO. So we got to be careful with that. But hey, how about that for freehand? Typically, when you see the consolidation patterns, you always want to watch this 0.786 level. If it goes below, so this is sort of like your bifurcation for any sort of bouncing that goes on within a triangle. Longer term, these can be B waves where then they head lower after that. But that would require like a massive market sell-off, and we're not seeing that quite yet. One day does not make a trend. So in my opinion here, you're looking at something like the 404 level. And this is where you want to see, like, if it breaches this level, then lower it's bearish. If it bounces up, then it's bullish. And then highly likely you see a continuation here where you get this another run higher. And this could be, you can get a little bit of pattern expansion or whatever. It's still just too early to call. I think it's like just slightly over mid pattern here that's developed. So for right now, that's kind of what I'm going to stick to, is this line of sand here, like 404.
Yeah, I have a question on this one.
Yes.
So if you go back to like a weekly chart, you can see a pretty strong trend line being respected. Yeah.
Oh, sorry, hold on. That's garbage. Let me look at this.
All right, there's a nice, from the bottom of that retracement there.
Oh yeah, like this.
Yes. Sorry. Or no.
Okay. Well, yeah.
No, I don't even think going all the way back there. I'm talking maybe just from the most recent low, from the March 30th low. If you zoomed in a little bit and flattened it out, you could see a nice trend line going from there.
You're talking about
on the way up.
Talking about this.
Yeah.
Yes. That's kind of what I was looking at the other day. It's still not necessarily a bullish pattern. So kind of like how we were talking about how this might be like this is in the day level. It's probably easier to see hourly.
Okay.
So yeah, like this triangle here they're typically B waves. So they usually happen at wave fours, or I guess which keep it simple. Triangles are usually a means to an end with any sort of pattern. So you could see something like this. I'm not saying this is going to happen, but from a long-term sort of view, I think it's definitely possible. I think this is a much stronger trend line if you're looking at it longer term. But this is still like a big ending diagonal, and I don't really know if it's going to be I don't really know if it's going to be respected or not, or if we're even going to see this. But if we do have let's say we have a big sell-off because these guys want liquidity. Excuse me, they want liquidity for SpaceX IPOs and Anthropic or whatever. Like, we still need to be careful with that because Tesla is still high. They have a great diversified business, but these IPOs that are coming up are huge. So it's gonna take a lot of money out of other positions and stuff. And it has really recovered a decent amount from that low that we had back in April, or well, really I guess like the end of March. So I guess my opinion on the matter is kind of go back to that last view where just from a hourly sort of thing, like if you're playing swing trades, I would say it did survive its test of the 200 GMA here, but this pin bar concerns me. This big buy spike, and then it got sold out right away, and then it continued. That to me is not a bullish sort of thing. It just tells me people are either trying to take profits at higher price or the highest prices possible, or it's just a normal sort of consolidation pattern that's playing out. So that's kind of my take on it. I don't want to like overthink it. Usually when you overthink it, then you screw it up. So hopefully that makes sense.
Yeah, thanks. I was hoping that trend line from the March 30th would be respected, but if it does break, then yeah, we have that wave playing out, like going all the way down back to 404.
Yep, and don't get me wrong, like I still really like Tesla. Like even if you do get a sell off and it makes a lower low than back in March or whatever, like I'm still a buyer around like 330, like 340, 330. But I still need to see a little bit more like price action here. Like it's one of those things where I don't want to short it, but I don't want to buy it either. I want to see what happens. So I am kind of, like my focus is a little bit off of Tesla. I'm actually kind of thinking, like looking at Bitcoin here. If we do get some sort of plummet, which kind of looks like wave 3 here, but it kind of looks like that sort of plummet. If it does start to find some sort of support with some really strong volume like this, you can kind of see this in the profile. That's where I'm going to probably pick some up, just because if it's that oversold, like you said, like pull up the weekly, something like that. It's getting there, getting to be pretty oversold here. But this is more of like a long-term sort of sell-off. So I, from like an income perspective, what's the fund name? It's come on now, I got it somewhere.
Yield max. What are you thinking?
Oh, BTCI, the Bitcoin High Income ETF. This is the one that I was eyeing up here because it's got a pretty nice dividend. It pays monthly, so this thing's been bleeding for quite some time. But as you can see, the volume's starting to pick up here. So I mean, it pays a pretty handsome dividend, and especially if it can be a little bit variable, but not too crazy. Like some of these other high income ETFs or whatever, they have like highly variable dividends. Like if you look at like GLDI. So like this one gyrates pretty significantly here, but it's still growing, right? I mean, but it's like it's kind of feast and famine with some of these things. But anyways, I guess long story short of it is like I am definitely a buyer. The more Bitcoin sinks here, just because like longer term, yes, I don't want to own actual Bitcoin. I want to own like a derivative of it because it's still a tradable asset, and if it moves on a chart, you can trade it. So I guess as far as I'm concerned, like, it doesn't matter what the underpinning fundamentals are, it's still a speculative asset. And I still think that even if you do have a massive sell-off, that kind of thing, the key is just position size. So if you end up getting in, let's say at, hold on 1 second, I'll pull it up. And then I do have to wrap up here. Where is it? But yeah, I mean, if you get this sort of, let's say you get a low here, like 50,000 or 52, or I think, can't remember what my price target was, something like that. That's still a very massive sort of sell-off. From peak to trough here, that's incredible. That'll take you all the way back to August 24, but it'll still take you back to the peak back in 2021. So if you load it up, at the peak, like you had a good run all the way up here when it was like 125, but since it's been selling off here, I think it's just a precursor for larger things to come here for the broader market. But it still would generate income from the managers of that fund. So that's kind of the main point there. Okay, I do have to wrap at the hour, but I guess I have time for like one more question, if anybody's got one.
I have a question, but I'll wait unless someone else. Don, do you have a question?
No, I'm good.
Okay.
Go ahead.
Gaines, I want to see, I don't know, can you chart one stock for me?
Sure. Let me just I'll stop the recording then.
Cool.
1 second. Well, I guess okay. If you're watching, then you could drop off if the stock doesn't interest you. It's just that sometimes I get like DMs and stuff about length of webinars. But yeah, Jake, I'm happy to chart something for you.
All right. So I bought into CRDO after the earnings sell-off, and then I missed my exit just the other day, and I'm concerned.
What?
Yeah. Is it forming a head and shoulders? What's going on?
Oh. Yeah, it's kind of a weird chart. But
I have time.
Yeah. Yeah, let me probably what you'll see. Okay, so like this is best case scenario where let's say you get this ABC and then you get maybe like a little bounce here where it might get up to, sorry, that's kind of a weird looking chart. 1 second.
Yeah, it's not good enough for me.
It's possible. You could get up to like 221, that kind of thing. I suppose you could dollar cost average, but again, you got to watch position size with this stuff, especially if the broader market's getting a little bit shaky. However, good news is that there's a lot of buy volume down here, so you might actually get a lot more support than than expected. Like my normal sort of plan of attack here is always looking at the volume profile. Like, yeah, you've got kind of a rounded top here, which suggests weakness. It could also double as cup and handle. And the cup and handle here, it's not very pronounced right now, but it could be, like if we get a recovery, let's say in like the S&P and Nasdaq and stuff, and it makes that like last little sprint higher, you could definitely see something like this where you get like those 5 waves within, where it kind of does this weird thing. But if you're with options though, and you've got a pretty tight timeline, like let's say the 18th, something like that, you might not have enough time to wait for it to play out. It just kind of seems like there's lots of profit taking up here. Now that I'm just thinking it through, like there was a pretty decent sell candle, but that was yesterday in a close, right? Oh no, sorry, that was this morning for open. Okay.
It kind of worked its way back after the earnings.
Yeah.
Like it had sold off huge, and then it came back to green that day. And then I thought, oh, like
yeah,
shouldn't
and
sell
that's
it. And I was
sometimes
up.
sometimes those are just reflexive rallies. Sometimes that can be like dealer hedging flows. That can be like trapped bulls that were trying to play earnings. You do see a decent amount of that when it comes to earnings. So like I always tell people when they're playing the earnings game, if you're playing a stock that has a very large market cap, highly likely you're going to see a retrace to where it was the day before within a couple days, just because there's so many trapped people that they're going to try to do whatever they can to influence dealer hedging mechanics or zero DTEs or whatever. Like they have a vested interest in getting back to where it was so they can get out of their positions. CRDO is a pretty heavily traded stock, so I don't see why you couldn't. This head and shoulders is just one pattern. I don't see why you couldn't have another. Let's say you get a slightly like not quite as high sort of shoulder versus where it was, that like in the third, or sorry, like this morning before it dropped. But it just depends on like what happens Thursday. So let's say it drops a little bit more tomorrow, and then Friday non-farm payrolls come in great, and then everything goes up. That's probably your last chance to exit something like that if it goes according to plan like that. Does that make sense? Trying to be optimistic.
Yeah. I definitely should have sold it when I could have.
I traded the stock, and it can do anything.
I mean, there you go. That's it. That's all you need.
I bought it at 80. I bought it at 80. It came down, and I bought a bunch more at 50, and I got out around 100, and then I got back in at like 170 or something, and bought it down to 120, and then got out of it again up around 200.
There you go. It can do anything.
Yeah.
Yeah.
It's all over the place.
There's gamma at 260 for the 18th, so that gives me some hope, like positive gamma all the way up there.
Yep, and it's following a pretty decent trend line here. So,
I mean, they're in all the right businesses, so this thing could. I don't know why it's not at 400.
Yeah, you could see something like this, like an ending diagonal, Jake. I mean, it kind of looks sort of like that right now. You get a little bit of overlap with wave counts now that I'm kind of looking at it. But this part's a little muddy here. Yeah, I still think there's a pretty decent chance it gets to like 230 or something, just from normal market gyrations. But you definitely have to keep an eye on it.
Yeah, cool. Thanks for the time, and
sure,
appreciate the question.
Good guys. Well, thanks for joining the call and everything. I'll stop the recording here. But thanks for joining in.